Hello nieces, hello nephews, it's your Uncle Charles, and look like the SPY decided to backtest that 50 daily moving average, guys. Backtest of the 50 daily moving average, and it also managed to recapture a fib level. I had around 548. That's both a bearish and bullish price action. It's not too surprising to see, considering we are still within the range of the mother candle. Also, we have a big data release tomorrow for CPI. As you guys know, CPI, it can be very volatile, at least in the pre-market, and it can move $10 in either direction, to the upside, to the downside, maybe more. Okay, so as far as swing trading goes, this is one of those days where I don't recommend, and I hope no one decided to do it. But if you did, all I can say is good luck. All right. As far as being bullish and bearish, guys, as usual, we got to go by the price action. Recapturing that 50 daily moving average would be a good start. In my opinion, clearing 550 would definitely make me believe that the 50 daily moving average is recaptured. And then clearing more resistant levels, 552, 553.4, which is a fib level, and the critical one at 555. I will only call a bottom if 555 recapture. So if CPI data releases tomorrow and then we gap up, watch the behavior after the gap up. And I mean during trading hours. Because if we gap up and then we start clearing more resistance, don't argue with the price action. It's time to go up. All right. But if we gap down or we break down more support levels, like getting back below 548, breaking down 546, breaking down the fib level of 544, okay, that would be bearish, because now we officially got the back test of the 50 daily moving average officially. So from here, we break down more support levels, that would be very bearish price action, starting with those levels. And if CPI comes in and we gap down and start breaking down more support levels like 540, especially in 537.7, that would be extremely bearish, and I would recommend everyone, including myself, to look too short. Triple Q also recaptured a fib level around 458, but like I said, we got to take it with a grain of salt with CPI tomorrow. If we gap up tomorrow and start clearing more resistant levels like 460, 462, and 463.4, we are bullish at least all the way up to 469 or higher. But overall, below 458, I would be bearish. So we gap back below it, I would favor more downside, 456, 454. And if we gap below 454, I would favor we go back and test 447.5, which is a fib level. And below that, bears resume control, at least all the way down to the 200 daily moving average around 442. All right, guys, please add these levels to your charts. NVDA also bouncing a little bit, recapturing. Well, yesterday it recaptured the 61.8 fib level. Today it closed just a little bit above my 50% fib level here, around 107.7. I rounded up to 108. But if it can stay above 108 and clear 108, follow through would be also to get above 111. I would be bullish up to 114 and 115.7-ish. Maybe even higher than that. We do have a gap all the way up to 119.5-ish, around that area. Okay, now if this is a dead cat bounce, we got to get back below those support levels, 107.7 and 106. Now, like I said, CPI tomorrow, so watch where it decides to gap. If it gaps up, and we, watch the reaction. If it gap above 111 and 111 can defend as support, watch for the breakout of the next resistant levels. Okay, remember, we break down support, we look to short. We break out resistance, we look to long. All right. Tesla. Yeah, Tesla also trying to bounce like all the other stocks and indices. But with CPI tomorrow, oh boy. But it did back test the fib level, though. Did back test the fib level at 226.5, 50% fib level. And it paused there. Not quite bullish price action just yet, okay? But if it does clear 226.5 or gap above it, thanks to CPI, we are bullish above 230. I would be bull bias. We could pop all the way up to 237 to 240 range. Okay, I would get bearish if we can stay below 226.5, break down 225 to go test 220.5. If we gap down below any of these levels, I'll definitely consider that. But below 216, bearish. Below 210, bears resume control. IWM, still the same plan with IWM. Still didn't quite break down that 207.5 as level. It's got to break it down along with the 206 level to trigger a move back to the downside or more room to the downside. Okay, I'll trust the bounce if it can finally recapture 209. It didn't quite do it, but if it does, more upside is possible. I have 211.88, 213, 215, and 216.7 all as targets, guys. All right. Now, let's end this with the option flows in the dark pool level. I do have the flows here, guys. What's big money doing before CPI? Well, we have $2.9 million going into puts compared to $389,000 going to calls. However, look what happened with these puts. A bunch of them is September 13th. Okay, 544 strike price, but look at where they entered. 544.9, 544.9, 545. They entered around the bottom of today's price range. They entered around support, if anything. Yeah, they entered puts around support. So I don't know what they're thinking, but they do have a lot of money, so maybe they know something that we don't know. It is a bunch of puts coming September 13th. This one's September 20th, 530 strike price. They entered around today's low as well. So they're probably, a lot of these guys are probably down a lot right now, but I mean, they do have a few days or a couple of days. Maybe they know something we don't know, because if SPY squeezes tomorrow, these guys are all cooked. All these people that bet, that's millions of dollars going into puts. One that's pretty aggressive is November 15th, 537 strike price. They entered around 547, so they definitely have time. This person right here this morning, they entered 567 strike price for October 18th. They entered around today's low, 545.73. $100,000 in premium. They might be up right now. I don't know if they took profits, but they entered earlier. Very interesting stuff. But overall, you guys see millions of dollars compared to $300,000 still going into puts. Most of these puts got cooked, like badly. We'll see what happens tomorrow, what the price action will do. Triple Q, overall bearish as well. 2.9 million compared to 561,000. Big difference. A lot of these calls, though, September 11th expiration date for 461 strike price. Triple Q did bounce a little bit. Maybe they made money on it, but I doubt they're holding it into CPI. If they are, that would be crazy. But they were pretty aggressive today when they bought it. And, Triple Q did bounce a little bit. As far as the puts goes, there's a big one right here. November 15, 440 strike price. They entered around 455.66, so they're probably not in a good position right now. But we'll see. Anything can happen with CPI, but keep that in mind. 440 strike price, November 15th. They definitely have time on it. And a lot of these other puts are expiring tomorrow. Not very aggressive, though. It's out the money, but, 454, 454, 453. This one, 445 for September 20th. $1.2 million in premium. I think this is the only one that's over $1 million right now. So what does this person know that we don't know? NVDA is bearish. You don't see it often bearish, but it's bearish today. Look at this. $1.2 million, right? 100 strike price. September 20th. Very similar to Triple Q. Interesting. Got a little bit of calls here. September 20th for 110 strike price. They probably made money on it. Yeah, I don't know. 110 strike price. Like I said, the one that really sticks out is the September 20th 100 strike price, over $1.2 million. That's very aggressive. Yeah, Tesla's next. Tesla is bullish. $2.5 million in puts, 3.1 million into calls. Pretty mixed. A lot of these puts are short term. September 20th. Let me raise the filter. Let me raise the filter to 200K premium, just a little bit. So the bigger money, as far as quantity goes, slight edge to the calls, but as far as money goes, value, slight edge to the bears for puts. September 20 strike expiration date, 220, 220, 217.5 strike price. Okay. And then you got September 13th for these calls, 230. That's pretty aggressive. For the shorter term, this one's September 13th for 220 strike price. This one's September 13th for 230. Look at this. December 20th for 250. Okay, so yeah, that's pretty mixed. I don't find that very helpful at all. Pretty mixed. IWM is bearish. Let me lower it down to 100K. So a little bit bullish, slightly bullish, slight edge to the bulls. A lot of these puts are expiring September 13th. Not very out the money. 27.5 strike price. The calls, this one 197 strike. This puts 197 strike price for September 30th. That's aggressive. And then the calls September 13th, 210 strike price. This is not too aggressive, but it's decent. This one's September 20th as well, 215 strike price. That's aggressive. So we've seen the big money players still, they got a little bit of time, but they think it's worthy of buying dips, especially before CPI. That's crazy. Crazy. All right, guys. Well, there you have it. That's Uncle's content for the day. I hope you guys found value in it. If you want more content from Uncle Charles, please consider joining my Discord. The link is in the pinned comment below. And yeah, don't forget to like if you guys like this content, guys. I have to pay good money for this, but I give it to you guys. Report it to you guys. All love for me and my fellow sheeps. Peace.